Marketfoolery@fool.com is our email address. From Drew, who writes, I'm a fool at heart and have embraced the buy and hold concept. My better half and I are planning a year of travel around the world to take place in 2019. I've been saving and I'm putting money away each month towards this sabbatical that I feel will be life-changing. I have my long-term stock investments, but would like to know if you have any recommendations on where I may put this monthly travel money for the short term of 3 years that is not too risky and that may provide more return than I would receive from a plain old savings account. I know you can't provide specifics, but any suggestions would be greatly appreciated. Keep up the great work and fool on. Just send it to us. Just send it 2000 Duke Street, Drew.
We'll give it back in 2019.
Yeah, we promise it'll be more. No, great question, and wow, that's fantastic that that he and his better half are planning that kind of trip. When I first read his question, I thought to myself, I don't know. Yeah. I don't know, because it is, if the question was, we're planning this trip in 10 years, then I would feel a little bit more confident about saying, well, take at least some of that money and look to just dollar cost average into a SPDR ETF, that sort of thing. 3 years, not a lot of time, Jason.
That's right on that line. That was the same thing I thought. Was it's right on that line where we always say 5 years. You know, we say if you have money that you can part with for the next 5 years, then it's okay to invest that money in the stock market. Unfortunately, we're also in the face of this fixed income environment where there just is no other return, and there's just no return on the CDs, no return on the savings account. Money market savings might as well just be a regular savings. There's nothing there. So I applaud what you're doing here. The saving, the goal. I mean, it all sounds so fun, and it sounds like he's pretty excited too, and I would be. The market is doing very well right now. I mean, I could see a scenario where you would take this money and invest it in an S&P index fund. And over the course of 3 years, I mean, anything can happen, right? I feel like we've probably learned a decent lesson to where we're not going to see a great recession-like market drop. But anything is possible. And I think the key here is no matter what, you've got to put yourself in a position where you're not going to be a desperate seller. I mean, if you look at the charts of the S&P over time, it actually doesn't look all that bad. If you look at the 2-year chart, you could see certainly some great opportunities in there along the months, and you could dollar cost average like you mentioned. Over 3 years, it looks even more attractive. Over 5 years, it looks even more attractive. But past performance is no guarantee that the future will be the same. And I just, the bottom line is you can't put yourself in a situation where you're going to be a desperate seller, because then you're going to be really kicking yourself. Perhaps the solution is you don't invest all of it. Maybe if you want to try to maximize the return on some of it, maybe you take a certain percentage of it, 25%, 50%, and then you dollar cost average into something like the S&P index fund. I would not put it in individual stocks. I would certainly depend on the having just sort of the broad diversity of the S&P index fund right there, as opposed to just individual stocks.
I was just going to suggest like a dividend fund, but not all of the money. Just especially if your idea comes to fruition with increased dividends rather than increased buybacks.
Dividends are cash in the pocket too. You know, that's the really nice thing about those.
So that would be my idea. But yeah, definitely not all of it. Keep the plane ticket money in cash at least.